Hey, welcome to another episode of the Ask Amity Show. My name is Edmund.
I'm Jennifer.
I'm Cindy.
And we are the attorneys here at Amity Law Group. Today we're going to talk about living trusts and life insurance. So one of you asked us, do you need to put your life insurance policy into your living trust? So Jennifer, can you start us out with, why would anyone put that insurance policy into a living trust?
When we do our living trust, we're planning for our assets being distributed to our beneficiaries. So one of our assets would be a life insurance policy. Generally when we purchase a life insurance policy, maybe within their forms, they'll ask for naming of a beneficiary. A lot of the times, our clients come in and they'll say, hey, I already named a beneficiary on my policy, and so I think I'm good. We always think about worst case scenarios. So our first recommendation would be to add the living trust as a beneficiary to the policy, because the living trust is a lot more comprehensive. It'll state, who your first beneficiaries are, and then if your first beneficiaries aren't able to inherit that asset, then you have a secondary and maybe, a third person in line, and kind of so forth. And so it kind of catches the policy just in case, somehow the first beneficiary that you named may have also passed away and unable to inherit that policy, avoids probate of that policy again.
Yeah, and one of the other reasons why someone would consider putting their life insurance policy into the trust is that you get the benefit of a living trust and its conditional gifting and conditional distribution. So with the life insurance policy, it's basically saying upon your passing, your beneficiaries would receive a certain amount of proceeds, but it would be an immediate distribution upon your passing. But if you were to list the trust as your beneficiary, then those proceeds would go into the trust account, and the terms of the distribution would follow the terms of the trust, and not just an immediate distribution upon your passing, because you may want to stagger that fund over a certain number of years, especially for minor children who are going to need the money to stretch out a little further while they're still underage. One of the other reasons you might want to consider putting the insurance into the trust is because, again, minors. If you put, a lot of people will put their children as the beneficiary of that insurance policy. But of course, we never know when we're going to pass, and it may happen when your children are still minors. So if you've listed your children as the beneficiary of that policy and you pass while they're still underage, then they're going to have to apply for a process called guardianship, where the court's going to have to appoint someone to take authority over the money that's owed to them under the insurance policy. And that may not be somebody you know or somebody you like, and they may not be able to manage assets as well as someone that you would name as a trustee.
Yeah, and one more thing is you want to make sure that your family knows that you have a life insurance. So there's a couple ways that you can let them know if something happens to you. The first is, if you have an estate planning binder, you can put the policy inside the binder, so they have all the details. And number two is, in your living trust, there's what's called a schedule of assets at the end of the living trust, and you can just list the life insurance policy in there with the policy number. So anyone who's helping you manage your living trust and your assets would be able to discover that you do have a life insurance policy. And it's good for them to know, because there is usually a limit as to when your family can claim the life insurance. And so you want to let them know as quickly as possible. All right, I think that is it for this episode. If you have any questions, you can leave a comment below, and we will try to answer it on our next episode. See you next time.